I'm in the process of updating my website. I've had some issues, and so I'm switching over to a different format. And I've got a lot of old reports on this one because it's an old website that I've put back online. And so I've got to update the reports and update some of the system lists. You've got all the platforms listed here. All the platforms, TradeStation, InTrader, Multicharts, have the same systems that are listed in TradeStation. So if you don't see it, or if you see any inconsistencies in my website, let me know. And I will have hopefully more updates soon. But going through these updates, I'm going through Cobra 3 right now. This is the 5-minute version. I have a 5-minute version and then a 1-minute version that trades like the 5-minute version using synthetic bars. And I use the 1-minute version for money management algorithms. But taking a look at the 5-minute version with the results that are on 1-minute and 5-minute are very similar. And you can see here is the equity curve. I always like to look at the equity curve. I like to look at the stats. $70 average trade profit. This is without slippage and commission. That's a very good number to day trade the E-mini S&P. Very, very good number, even without slippage and commission. Profit factor of 1.5, about 50% profitable. Low drawdown. This is going back to 2000. So since 2000, here's what it looks like. And you see the worst case drawdown happened here in 2009, and we're near that right here. And so this gives you an opportunity to get in, and it's just like the market. People sell at the lows and buy at the highs. And a lot of people, when they trade systems, they love to buy a system or start trading a system when it's at these equity peaks, and then when it goes through this drawdown, they get out. And I see this all the time, the way people trade. For example, in 2015, didn't do much. Beginning of 2015, didn't do much. It's right here, and then it takes a dip down, recovers, takes another dip down, and then at that point, a lot of people are like, forget this, and then boom, it explodes. And so almost $10,000 per contract explode right here over a if you started in January, your 12-month period right here was at 69, and at this point at September 1st you're at 68, and you're like, wow, I'm down after slippage and commission. I'm down, so you're at 68, and then by January of the next year you're up to 79. Now that's that's about 100 trades, and so you've got $10,000 almost in 100 trades, and it's about $100 a trade after this big, huge, massive run up. And so your profit wouldn't have been $10,000 after slippage and commission, but it pays to stay in a system that works and at least have a risk, at least get in on a drawdown and have a risk tolerance so that you're okay if you miss the move, because you've got to get a return on capital by a certain time. But getting your return on capital gives you the best chances to get in on dips. And so you see that here. You see these little spikes. When you look at this equity curve, you look at the systems, that's a good system. And then so you're looking at since 2000, so you're looking at 15 and a half years of data. But when you're trading this during the day, or not during the day, but just in the short term, it is a day trade strategy. But in the short term, you go through these little bitty peaks and valleys, and they feel bigger. They feel bigger when you're going through them in real time and sitting through this and looking at them over 1, 2, 3 month period versus say a 2-year period. And so I always say that trading systems are a long-term investment. Even though they're day trade strategies, you have to stick with them because you don't know when the system's going to do well and when it's going to go sideways, when it's going to go through a drawdown. And so one of the best things to do is to have a set of systems that are not the same, and you have diversity. And so if you have just one system, you might experience a year of sideways to down action, and that just happens sometimes. But if you have a set of systems, you improve your odds. You can no matter how much you improve your odds, no matter how much you diversify, you can still go through that sideways action or downward drawdown for an extended period of time when trading. But waiting for those extended periods of drawdowns before you start gives you a better chance of getting your return on your capital in a certain period of time. And so that's why I say when you start during a drawdown. Now, trying to time it as far as getting in and getting out, getting in, getting out, I don't have a complete recommendation overall. I have my money management algorithms that will allow you to systemize that for each system. But as far as getting in and getting out, that's not what I'm saying. I'm saying when you start a system for the long term, buying it on the dip, there's no question that that's a good strategy. And I like to look for strategies that have that opportunity, and I want to share that with you with Cobra 3. And this strategy works in TradeStation, NinjaTrader, multi-charts. It's in a drawdown. It uses the advancers and decliners on the NYSE. And that's the update for today. Be continuing to look for more opportunities, or anything on my website you see that's inconsistent after I update it, because you can find this strategy here under TradeStation. If you go to Cobra and you go to Cobra 3 stock indexes, you can see more about it. And I haven't updated this since in 3 years. It's an older website, so I'm reverting back to the older website. I'm updating the reports, and you can let me know if you have any questions. Have a good weekend.